Welcome back to EBNet Stream, everybody. With the recent conversations in the press around Trump and the tariffs and the possibility of sanctions, I approached Izak Odendaal, who's the investment strategist at Old Mutual Wealth, to have a chat with me about how these might impact members' retirement fund savings and their investments. Welcome to EBNet Stream, Izak.
Hi.
I'm going to jump right into it, Izak, by asking you, are sanctions and tariffs the same things?
No. There's a very important difference. I mean, tariffs are basically when you import something, there's a tax, right? The government levies a tax on that import, and that is called a tariff, or it can be called a duty or a customs duty, depending on what you call it. But typically, that is a revenue-raising mechanism for the government, and it is also used often to protect domestic producers, domestic businesses against imports. So it can have a broader policy objective. And tariffs are used in many countries across the world, but the general trend has been over the last couple of decades for tariffs to decline. Right. So if you think back to the 1920s and 1930s and so on, tariffs were very high, often 40, 50% tax would be added on any kind of import. And these days, I mean, those numbers differ, but let's say around 5%, let's call it, would be an average tariff for countries. Sanctions, on the other hand, you really are trying to target a specific country. You are trying to harm either that country or a group of people within that country because they are doing something that you disagree with. I mean, at the moment, sanctions, so the West will have sanctions against the government in Zimbabwe because of human rights abuses, against Iran for kind of similar story. Sanctions recently imposed on Putin and his kind of cronies because of the invasion in Ukraine. So that is really a means of coercion. It's a means of trying to get the government of another country to change whatever they're doing, something that you don't agree with.
Thank you for that. And it's a very important distinction because it feels like what you're telling me is that tariffs are more commonplace versus sanctions, which are a lot more, well, really just a lot more, a lot more severe, and would have quite an impact. And that leads us to the conversation around. Donald Trump is using these words like sanctions around his tweets on land expropriation, our support of various other countries in the world. Let's pretend worst case scenario here, and he does decide to impose sanctions. First of all, what do you think the likelihood of that is? And second of all, what do you think the impact of that would be?
So I think it's very unlikely. And Trump is an unpredictable figure. So I wouldn't say the chance is zero, but it is unlikely because it's something you do in extreme cases. It's something you do, as I said, when you're dealing with dictators or countries that invade other countries or countries that engage in criminal activity and so on. So it really is quite an extreme measure. And therefore, I think it's unlikely. I think it's more likely that we'll get tariffs, which we can chat about in a second. But if we were to be sanctioned, I think as and again, it depends because typically sanctions are applied against individuals. Certain individuals will have, they won't be allowed to travel internationally, or they will have their bank accounts frozen, or so on. But if sanctions were applied against South Africa as a country or as the government, it would be very disruptive because one of the things that would potentially happen is we would get locked out of, the global dollar system. And obviously we rely on that. We import, we export, we trade. If we were sanctioned, US banks wouldn't be able to touch us, for instance, in an extreme scenario. So it would be very disruptive. And also, I think for that reason, we're unlikely to go there because it would also hurt US business interests in South Africa. There are a lot of businesses have invested in South Africa. A lot of US businesses are active in South Africa. So it would be detrimental for them as well. So no, I don't think we were going to go down the sanction route. But if we do, it would be quite negative. So if you then try and tie it through to, retirement funds and retirement savings and so on, yes, I think you'd have quite a negative impact on South African markets. I think the bonds and equities will suffer. But I think the rand will fall a lot. And in that instance, your global portion of your retirement savings could even go up in value because of the decline in the rand.
Then let's talk about the more likely scenario, or what I'm hearing you say is the more likely scenario being tariffs. And I guess I'm going to lump in there the withdrawal of aid. What do you think, or how do you think this is going to impact on retirement fund investments?
Yeah, so again, I think we also need to distinguish between tariffs and the withdrawal of aid. So the US supports South Africa. I mean, the US government had a budget of about $40 billion of foreign aid across the world. And that whole agency has now been basically shut down. So South Africa is not the only country that's lost aid development support from the US. We were receiving about $400 million a year, and most of that went to HIV/AIDS programs. It seems maybe those programs have been exempted. Again, the situation is quite fluid. But ultimately, we did not receive that much aid from the US because we are a relatively well-developed country. We don't rely too much on charity because we have our own resources. Whereas other African countries are quite heavily reliant on aid from the US and Europe and other rich countries to support healthcare, education work, and a lot of other important things. So the aid component is very unfortunate, but that's not a huge issue for us. I think the South African taxpayer can pick up that tab fairly easily. We'll obviously possibly hear about that during next week's budget. The tariff issue, on the other hand, I think is a bigger deal. And again, we need to see it in the context of probably tariffs are going to be imposed on a lot of countries, not just South Africa. One of the things Trump said during the election campaign was he wants to impose tariffs across the board on all countries and all imports coming into the US because he's very concerned about the fact that the US runs a very large trade deficit. In other words, the US imports more than it exports. But the reason the US imports more than it exports is because it's got this huge consumer market, and domestic production cannot meet the needs of that consumer market. And so, in a sense, the trade deficit, which Trump thinks means that the US is losing, it is actually a sign of very strong demand. It's actually a sign of a very healthy US consumer. Anyway, that's an aside. South Africa would be negatively impacted by tariffs. About 8% of our exports go to the US. Of that, about 3%, so roughly a third, are currently under the so-called AGOA agreement. So AGOA is the African Growth and Opportunities Act, and that's a mechanism that the US imposed in order to let African countries export into the US without paying tariffs in order to support development in Africa. And South Africa benefits from that. Now, South Africa's participation in AGOA was always a bit questionable because we are obviously much more developed than other African countries, and therefore, it was questionable whether we needed this additional support. And so I think our participation in AGOA was always going to be up for debate. There is now a discussion in the US whether the whole AGOA mechanism should be renewed or not, because it is set to expire at the end of this year or next year, I think. So there's that complication as well. But so I think there's probably a good chance that we will be left out of AGOA if AGOA is renegotiated, and there's a chance that we might see additional tariffs imposed on the imports that are not covered by AGOA. Okay, what is the impact on South Africa? Again, it's very difficult. It's very difficult to know because a lot of things could happen, right? So again, if you think about this, is a tax that's paid at the border as the goods enter the US. And the tariff is typically paid by US importers, not by exporters. So we don't pay the tariff. The tariff is paid by, the US company that's importing, let's say, South African wine. They pay the tariff. So what is the impact? So one scenario would be that South African bottle of wine just becomes more expensive in a US supermarket, and therefore consumers don't want to buy it anymore, and then we lose the sale. Another scenario is that the rand actually weakens, and let's say it's a 5% tariff, the rand weakens 5%, then really there's no difference, right? Nothing's happened. Another scenario would be that the US importer says, okay, I will absorb that 5% tariff in my margins. So I'm not going to increase the selling price on the shelf in Target or Walmart. I'm going to absorb that tariff in my margin. Another scenario would be the South African wine producer saying, okay, well, I will cut my price by 5% so that you as the importer don't have to absorb the margin, or it could be a combination of all of the above. So it's very difficult to know where we stand now, what the economic impact will be of higher tariffs. It will really depend on all of these factors, all of the decisions made along that value chain from the South African producer to the US importer to the company ultimately selling the product to American consumers. A big part of our exports to the US is actually just platinum, right? And platinum is not something that they can really find elsewhere. South Africa is the biggest producer. So if you impose tariffs on platinum, all that happens is that platinum becomes a bit more expensive to the US companies that buy platinum. It's not necessarily going to have a big impact on actual demand for platinum. So I think in summary, you want to say that tariffs probably are negative, right? Because they do cause all of these frictions, and somewhere along the way, someone has to absorb the cost. So the economic impact of tariffs is probably negative, and negative for the South African economy. It's very difficult to say at this stage whether it's going to be a massive negative impact. It will depend on a lot of factors. One of which would be, are we the only country that's being tariffed, or all other countries being tariffed? Because if all other countries are being tariffed, then this negative impact gets kind of multiplied across the world. And then we're not just losing exports to the US, but potentially to Europe and to Asia as well, because some of those exporters into the US are also now struggling with kind of managing their production lines and their supply chains and so on. So it really is quite a difficult and fluid situation at this stage. Nonetheless, it is unfortunate that South Africa is being singled out. It is unfortunate that we are in the spotlight. I don't think it's a good thing. We don't really want to be here. And even if the impact is purely on sentiment, or on how global investors view South Africa, that is also a negative for our economy. We're at this point where things were actually going better. We've got the Government of National Unity. We're supposed to host the G20 this year. We're supposed to kind of show the world that we are making progress in tackling our various domestic difficulties. And now suddenly we're completely on the back foot.
So when we turned over into the new year, my wish for everybody was to have a very boring and predictable year, but clearly that's not what the case is. And speaking along those lines, retirement fund members, I mean, I sit in a defined contribution fund. I mean, would your advice be for me to start looking at increasing my offshore exposure, or possibly divesting some of my money into money market portfolios? What would your views be there?
I don't think we need to make any changes to asset allocation based on the news coming out of America, because at this stage it really is just news, and a lot of it is just noise. So I think we make asset allocation changes when you're getting a very strong valuation signal, so something becomes quite cheap or something becomes quite expensive. I think that's a good time to make valuation changes or asset allocation changes. Obviously, if your own personal conditions change, if you suddenly, you'd switch into money market if you think, your own personal conditions are such that you might need access to cash pretty soon. But I wouldn't make any changes based on what we're seeing right now, on the assumption that your portfolio is diversified anyway, because you are going to have, if you invest in a sort of a standard balanced fund, you are going to have pretty decent offshore exposure, but you're also going to have some cash. You are going to have exposure to South African equities. I mean, again, if you think about the rand weakening, a scenario where the rand weakens, I mean, there are a lot of shares on the JSE that will actually benefit from a weaker rand. So that's not necessarily the worst thing either. So no, I definitely would not respond to news by sort of chopping and changing my retirement portfolio, because the reality is then you're going to be very busy for the next 4 years, chopping and changing your retirement fund, and you might end up at the end of this 4-year period saying that I've done much more harm than good by doing so.
Thank you, Izak. Thank you for the messaging around don't base your investment decisions on what you read on Twitter or X or Social Truth, and for reminding us how important diversified investment portfolios are. Thank you for taking the time to speak to us today.
You're welcome. Thank you.